Imagine this. You log into your bank account, and sitting there is a neat little pile of cash, maybe $10,000. It looks safe, comfortable, and boring, like a pet rock. The bank smiles politely, gives you a few pennies of interest, and you walk away thinking you're being responsible. But here's the quiet truth, that money isn't safe. It's shrinking, slowly, quietly, like ice left on the counter, melting while you tell yourself it's still solid. Inflation works that way. Each year, the same money buys a little less. The bank isn't your vault of safety. It's a slow leak in your financial boat. I used to treat my savings account like a trophy cabinet. Every time the number went up, I felt a little smug. But numbers on a screen aren't wealth if they're losing value every month. That's not growth, that's erosion. And the strangest part is how normal it feels, because everyone around you is doing the same thing. This video isn't about scaring you, it's about showing you what's possible when you give your money a job. Just like you wouldn't hire someone and then let them sit in the break room forever, your dollars need roles, responsibilities, and purpose. Left idle, they get lazy. Put to work, they can build an empire. So let's treat that 10,000 as an opportunity. Not a lucky windfall, not a fragile egg you're afraid to crack, but as a seed. Seeds are small, but with care, they become forests. What we're going to talk about is how to plant, water, and protect that seed until it grows into something that changes your life. First things first, protection. Before you start dreaming about compounding wealth, yachts, or early retirement, you need a safety net. Think of it as the moat around your castle. Life has a way of throwing spears when you least expect it. Job loss, medical bills, that old car of yours suddenly deciding it wants a new engine. Without protection, those surprises knock you flat. That's why the emergency fund is step one. Yes, it's boring. Yes, it just sits there. But boring is the point. It's not there to grow. It's there to guard. Imagine a fire extinguisher. You hope it gathers dust in the corner, but when the flames arrive, nothing else will do. A few thousand in a plain savings account buys peace of mind that no stock chart can match. I learned this the hard way. Years ago, I had money in the market, but nothing set aside for emergencies. Then a series of medical bills hit me like a 1-2 punch. I was forced to sell investments at a loss just to cover the basics. If I had an emergency fund, I wouldn't have torched months of progress. It was a painful but priceless lesson. Protection first, growth second. Think of it this way. Your emergency fund isn't dead money. It's invisible armor. It lets you take risks in other areas without the constant fear that one bad week will ruin you. Even a few thousand tucked away changes the way you walk through the world. You make decisions from a place of calm instead of panic. That's worth more than interest rates. Now, once your armor is in place, we need to talk about the enemy of progress. High interest is. Carrying a balance at 20% interest is like trying to climb a mountain with a backpack full of bricks. The math is brutal. Paying it off is the same as locking in a guaranteed 20% return, and you won't find that kind of certainty anywhere else. I had a friend who called his credit card debt the invisible vampire. Every month, it drained him, no matter how hard he worked. He'd pay down a bit, then the interest would grow it back, like a monster in a video game that keeps respawning. The day he killed it off, he said it felt like he'd just been given a raise. Same income, but suddenly his money stayed his. That's the kind of freedom we're after. So let's make this clear. Before investing, before side hustles, before the glamorous stuff, slay the debt dragons. Emergency fund first, debt second, only then do we talk about building wealth. And when you finally get to that stage, that's when the real fun begins. Because investing is not about luck. It's about systems, patience, and planting those seeds over and over again until they start to grow on their own. Once your foundation is built and your debts are cleared, it's time to shift gears. This is where your money stops being a passenger and starts driving. Investing is not a lottery ticket. It's not about chasing the next shiny stock tip or praying for overnight riches. It's a long game, and the winners are the ones who stay at the table. Think of investing as planting an orchard. One seed won't change your life, but 100 trees planted patiently over time, that's shade, fruit, and firewood for decades. Wealth grows the same way, slowly at first, then all at once. History shows us the power of patience. The S&P 500 has averaged close to 10% annual returns over the past century, even with recessions, wars, and crashes along the way. Markets go down, markets go up, but the long arc rewards those who stay consistent. Here's the part most people miss. Consistency matters more than brilliance. You don't need to predict the next Apple or Tesla. You need to invest regularly, reinvest your gains, and resist the urge to panic when headlines scream doom. It's not about timing the market, it's about time in the market. So, how do you put that 10,000 to work? Start simple. Broad index funds are like the reliable family sedan. They won't turn heads, but they'll get you where you need to go. An S&P 500 fund or a total market fund spreads your risk across hundreds of companies. Fees are low, growth is steady, and compounding quietly does the heavy lifting in the background. But don't stop there. Consider adding a layer of dividend stocks. Companies like Johnson & Johnson or Coca-Cola not only grow, but also pay you a slice of profits every quarter. Those dividend checks may start small, but over time they can snowball into an extra income stream that feels almost magical. Real estate investment trusts are another piece of the puzzle. They let you benefit from real estate income without fixing toilets or chasing tenants. By law, they pay out most of their earnings as dividends, which means you get a steady flow of cash for being a part owner. And don't forget the world beyond your borders. International funds expose you to growth in Asia, Europe, and emerging markets. Economies rise at different times, and spreading your bets makes your portfolio more resilient. Finally, keep a small slice for growth plays. These are your higher risk, higher reward investments. Tech, small caps, new sectors, they won't all win, but the ones that do can transform your portfolio. This is the spice that keeps investing interesting. The golden rule here is understanding: never put money into something you can't explain in a sentence. If you don't know how it works, you're gambling. Knowledge is part of the investment. Even 30 minutes of study a day can make you more informed than most investors. I once knew someone who bought shares in a company because the name sounded cool. No research, no clue what the business even did. He lost half his money within a year. Compare that to another friend who spent a month reading about index funds and patiently invested every paycheck. 10 years later, her portfolio had doubled, and she slept like a baby during every market dip. The difference wasn't luck, it was literacy. So treat your money like employees. Some are steady workers, some are high performers, and some are apprentices learning the ropes. Diversify, supervise, and let time do the heavy lifting. But money doesn't only grow in markets. Some of the best returns come from things you can touch: tools, skills, small businesses, and that's where we're heading next. Shall I proceed with part 3 on non-market opportunities and side hustles? Money in the markets is powerful, but don't overlook the opportunities that exist outside the ticker symbols. Some of the fastest returns happen when you invest in tools, skills, or small ventures that others ignore. Take the example of a simple pressure washer. Someone buys it for a few $100s and starts offering driveway cleaning in their neighborhood. Within months, they're earning thousands. That's a return most hedge funds would envy. Or think of a person who picks up a camera and builds a photography side business. What starts as weekend shoots soon becomes a reliable income stream. These aren't just jobs, they're assets that produce cash flow. A mower and blower can turn into a lawn care service. A carpet cleaner can create a steady side business. A set of rental tools can pay itself off many times over as contractors line up to borrow what they don't want to purchase themselves. Even bounce houses and popcorn machines become profitable when parents and schools need entertainment for events. The beauty is in the scalability. What starts small can expand with demand. Word of mouth spreads, clients return. Before long, what was once a side hustle can rival a full-time salary. And unlike stocks, you control the pace. You decide how much effort and creativity to put in. Another overlooked return is in education. Not the kind with a cap and gown, but the kind where you learn a skill that multiplies your earning potential. A construction worker who learns basic marketing can turn jobs into a full company. A fitness enthusiast who learns online coaching tools can scale from a handful of local clients to hundreds worldwide. A bookkeeper who learns coding can move into data analysis and command a far higher income. The internet has opened the gates wide. Anyone can build an e-commerce shop, launch a course, start a YouTube channel, or freelance for businesses across the world. The limiting factor is no longer access, it's willingness. And stacking skills creates exponential value. When you combine 2 or 3 abilities, you become rare. Rarity commands a premium. One man makes 6 figures teaching people how to organize digital photos. Not photography, not editing, just the organization. It sounds trivial until you realize how many millions of people drown in messy files. He saw a problem that others ignored and turned it into a fortune. That's the essence of opportunity. Think of non-market investments as a second engine. Markets compound over decades. Side hustles and skill-based ventures can accelerate your journey in the short term. Together, they create a powerful cycle. Higher income feeds your investments, and investments give you freedom to chase bigger opportunities. And that's before we talk about the hidden superpower of wealth building, compound interest. That's where we go next. Compound interest is often called the eighth wonder of the world. It looks boring at first, but it has the power to turn modest sums into fortunes. The idea is simple. Your money earns money, then that new money earns money too. The cycle repeats until the growth looks unreal. Picture snow rolling down a hill. At the start, it's just a handful, but with every turn, it gathers more until it becomes an avalanche. That's compounding. It works slowly in the beginning, then faster than you expect. Take $10,000 growing at 10% annually. After 10 years, it's around 26,000. After 20 years, over 67,000. At 30 years, more than 170,000. By 40 years, nearly $500,000. And that's without adding a single extra dollar. Now imagine adding a steady contribution, $500 a month on top of that, starting 10,000. In 10 years, the account could be over 127,000. In 20 years, nearly $500,000. In 30 years, more than 1.3 million. In 40 years, almost 4 million. That's the magic of consistency plus time. The key isn't perfection. Missing a month doesn't destroy the outcome. Making a bad choice along the way won't erase decades of steady effort. The market rewards persistence. Time is the greatest ally. Every dollar saved today is more than a dollar tomorrow. It's a worker that never sleeps, never takes breaks, and quietly recruits more workers year after year. The earlier you start, the more powerful the effect. But compounding isn't the whole story. Once wealth begins to grow, the challenge shifts from building to protecting. And that is where many stumble. The next step is learning how to safeguard what you've built. Wealth without protection is like building a castle without walls. It looks impressive until the first storm or attack arrives. Protecting what you've built isn't glamorous, but it's essential. Scams, bad deals, and impulsive decisions can wipe out years of effort in a moment. Promises of huge monthly returns, secret trading systems, or miracle crypto robots always sound tempting, but the rule is simple. If it looks too good to be true, it is. The people selling shortcuts make their money from the sales pitch, not from the results. Diversification is the shield. Never put all your eggs in one basket. Spread your investments across different assets, so one mistake doesn't ruin everything. Stocks, bonds, real estate, and small business ventures all play different roles. Some grow fast, some provide income. Others act as anchors when storms come. Together, they balance the risks. Clarity is another safeguard. If you can't explain your investment strategy in plain language, it probably isn't safe. Complexity often hides weakness. Simple strategies last. Protection also means insurance. Health, home, life, and even disability coverage are not thrilling purchases, but they can save you from financial collapse. One accident or unexpected illness can erase a decade of progress without proper coverage, and don't underestimate the power of discipline. Protecting wealth isn't just about paperwork, it's about saying no. No to reckless spending, no to speculative bets you don't understand, no to lifestyle creep that eats your cash flow as income rises. But money is only part of the equation. Building lasting wealth is mostly a mental game. Mindset shapes outcomes far more than math, and that's the next frontier. Wealth is built in the mind before it shows up in the bank account. Numbers matter, but psychology matters more. 80% of success is behavior, 20% is math. A scarcity mindset whispers that money is always slipping away. It makes you grasp at short-term comforts instead of long-term freedom. It convinces you to spend today because tomorrow feels uncertain. Shifting away from scarcity to growth is like turning on a light in a dark room. Suddenly, you see choices where before you saw a limit. Delayed gratification is the superpower. Every time you choose the used car over the shiny lease, every time you pack lunch instead of swiping for takeout, you are practicing freedom. Not deprivation, freedom. because those dollars saved are not gone. They are redirected toward a future where money works for you instead of against you. Intentional spending is the compass. Buy what truly matters: your health, your relationships, your future self. Skip the things that only impress strangers on the internet. Gratitude sharpens this focus. When you appreciate what you already have, you stop chasing what doesn't matter. Environment is another silent force. Surround yourself with people who push you upward. Friends drowning in debt and constant spending habits can pull you into the same loop. Friends building, learning, and investing create a different pull. Excellence attracts excellence. Books, podcasts, and mentors feed this mindset. Consistent exposure to growth-oriented ideas reshapes habits in ways that compound just like money. Little by little, you think differently, act differently, and eventually live differently. The mental game is not about becoming perfect. It is about becoming consistent. Because consistent action, fueled by the right mindset, is what carries you through the years it takes to see results. And now comes the final piece, the roadmap. A vision of how $10,000 grows into lasting freedom. That's where we end this journey. The journey from $10,000 to financial freedom is not a straight sprint. It is a series of stages, each building on the last. In the first 6 months, the focus is habit, building an emergency fund, paying down high-interest debt, opening an investment account, setting up automatic contributions. These early steps look small, but they create momentum. By the end of the first 2 years, experience replaces uncertainty. Market swings no longer feel terrifying. Mistakes happen, but they become lessons that sharpen your judgment. The portfolio begins to take shape, and confidence grows with it. Around years 3 to 5, compounding begins to show its power. Income is rising. Investments are snowballing. The systems you built earlier start working in the background while you focus on new opportunities. The engine of wealth begins to feel real. By year 10 and beyond, you become the person others ask for. Befus. Multiple income streams flow. Financial stress fades. You move from survival to choice, choosing where to live, when to work, and what projects to pursue. Freedom shifts from dream to daily life. This journey is not about luck. It is not about catching the perfect stock or winning the lottery. It is about discipline, patience, and steady action repeated over years. Each skipped impulse purchase, each extra dollar invested, each skill learned compounds into a future that looks almost unreal compared to where you started. Picture yourself a decade from now, waking up without financial fear, knowing bills are covered by systems you built, having the freedom to walk away from work you dislike and lean into work you enjoy. That is the payoff of starting today with $10,000 and a plan. Every dollar you direct with purpose is a vote for that future. Every decision is a brick in the foundation. The earlier you begin, the stronger the structure grows. The path is not about getting rich quick. It is about getting rich for sure. Steady, secure, undeniable. We've walked through the steps, from building protection to growing wealth, from defeating debt to shaping mindset. $10,000 is not just cash sitting in an account, it is the seed of freedom if you give it purpose. Now it's your turn. Take one action this week that moves you closer to your financial future. Small steps, done consistently, will change everything. If this video gave you clarity, support this channel by liking it, subscribing, and leaving a comment with the step you're committing to today. Share this video with someone you care about who could use a clearer path toward freedom. I'm wishing you luck as you start or continue your journey. And when you're ready for the next step, explore the other videos on this channel. They're here to guide you further along the passive path. I'll see you in the next video.